Hi everyone, today let's look at Costco earnings, as well as the economic data, then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Costco announced earnings today. They kind of announced on a weird schedule, and it was okay. Sales rose 1.1% year over year, 0.2% in the US. And because of that, they're down a little bit after hours. We'll look at the charts and see what that looks like for Costco. Obviously, this is a great company, one of the best performing companies here recently, but it's just hard to keep up that kind of growth and maintain the multiple that it has. Traffic continues to rise here, 5.2% worldwide, 5% in the United States. In terms of earnings per share, they did beat by a couple of cents per share. Revenue also beating by about $1 billion. Everything still looks good for them. I think the stock price is more reflecting the really high expectations and the really strong growth that it has had. And it's just impossible to maintain that forever. So we're seeing a little bit of multiple on that basis, in my opinion. They added 71 million paid household members, up 8% from a year ago, which did outpace new store openings, which grew by slightly under 3%. Like I said, everything is still growing and it does look decent. It's just hard to keep up that same pace of growth and the really high multiples. Moving over to the economic calendar, building permits slightly below expectations, but not bad. Headline building permits slightly below expectations. Consumer confidence also below. New home sales also below. Not great. Looking at tomorrow, we have core durable goods here at 8:30, and then the month-over-month numbers at 8:30 as well. Crude inventories, 5-year note auction, that will be a little bit interesting. And then looking at Thursday, we have GDP at 8:30. Jobless claims, as always, pending home sales at 10 o'clock, 7-year note auction. And then, interestingly, we have Fed Powell speaking at 1600, as well as the Fed balance sheet at 1630. Fairly interesting for the end of Thursday. Moving over to Max Pain, you can see we're at 1.8 million options, quite a few. Max Pain at 440, we are way, way below that. Also way below this very, very high put wall at 430, definitely interesting. Sitting just $1 or $2 below the bottom of the calls, obviously showing a ton of weakness. Next put wall is down at 420. You have lots of puts making money this week. We'll see if that carries over into the end of the Friday session or if we see a little bit of a rally, just so that these puts don't make too much money. But obviously everything looks very weak right now, and we'll see that on the charts. Moving over to the charts, starting off with the S&Ps on the hour and the daily. Another bearish day, gap down, consolidated, fell throughout the session. I added a level here at 425.82. You can see this little consolidation that we had at the beginning of June from 2023. We're right at the bottom of that consolidation. Still bearish momentum, still bearish RSI. This is still a big breakdown. Still watching that 200 on the daily chart sitting at 418.46. Everything still looks bad. Again, a little bit of momentum tipping towards the bullish side, but even if we did get that, you would expect it to be very similar to what we saw on Monday. A little bit of a rally, followed by a sell-off. Obviously a big downtrend here on the SPY. Moving over to the NASDAQ, very similar thesis, gap down, consolidation, touched that next level at 353.24, touched it basically to the penny. I think we hit 353.23, so very, very close. You can see that longer term trend line there as well. It'll be interesting to see if this holds. We're right at that previous low going back to 18 August. We're rallying a little bit after hours. I would barely call that a rally, to be honest, but it is up a little bit after hours, and you can see that here. About 50 cents. Not quite oversold on the daily chart. Still bearish momentum, bearish RSI. Still looks weak, just like the SPY, but interesting to see a little bit of after hours bullishness. Moving over to the Russell and the Dow. Super bearish, as you would expect. Took out this level, hit the trend line, and it's kind of holding right there. Next level of support for me, though, is 172.60. That's going to be an interesting level at this previous consolidation going back to May. I wouldn't expect it to stop before we got to that level. Dow, similar thesis. Very critical level here, 335.91. That really needs to hold. You can see how it rallied through this next area very quickly. Had some consolidation in this zone, but realistically, you can see we threw wicks to this next level at 329.40. We talked about that level in the Sunday video. Very interesting level. If this one breaks, it could be a very quick move through that zone. In terms of momentum, obviously bearish momentum on both zoom in here just to take a look at that RSI. We hit oversold conditions on the 4-hour chart. Russell actually showing a little bit of divergence. You can see we hit a low on the RSI going back to that 21 September timeframe. We're actually much lower in terms of price, showing a little bit of strength on RSI. Could be an interesting area. Like I said, still watching 172.60, but that RSI shows a little bit of interesting movement. Moving over to Costco here just for a moment, you can see we've been in a pretty decent uptrend. You can see we consolidated all the EMAs and SMAs on the 12-hour chart. Big breakout, continued to rally all the way up into that 567 area, topped out through a little bit lower high here, and now we're breaking down all the way down to 540 back at this previous low. Again, if this takes out a midpoint, that could be interesting. Break all the way down to the highly traded zone, down around that 500 area. That'd be a pretty significant move down, a little bit more than 10% from its highs. Obviously bearish momentum, bearish RSI coming off of that earnings announcement. Moving over to Apple and Tesla, we talked about this trend line here on Apple. We said it was super critical for that to hold. Sure enough, it broke immediately, and then once it did, we fell throughout the session, getting close to that 170.90 area. You can argue this previous low is holding right now, fairly interesting, but 170.90 definitely interesting. Trend line below that at 168. And if that starts to break here, you can see this is definitely rolling over, definitely breaking down. The question is, where do we go next? If these trend lines break, you could be looking at a move all the way down into the 155 area, which would be a very substantial move for Apple. Tesla also showing signs of breaking down again. Pretty consolidated on the day, to be honest. Hit VWAP, then broke down from there, falling after hours. Doesn't look great, but fairly interesting at this previous consolidation low. Obviously still a bearish trend, but look how little volume there is right at the bottom of this consolidation. If that area breaks down, you should be expecting a move into that next level around 232.57. Moving over to staples and discretionary. Staples breaking down, still watching 68.91. No change to the thesis. Discretionary broke down as well, looking for 158.03. I would expect that that level is going to break. Zooming out here just to get that volume profile, you can see there's just no volume in this area. It broke through here very quickly. Next area of volume is down around that 150 area. And realistically, you could argue that 148.90 would be the next level of support, in my opinion. Moving over to breadth on the 50 and the 200-day averages, you can see the 50-day average, big leg down, took out this level here from March. At this point, now we're watching 1050. That could be interesting. If we get all the way back down to 2.75, that's going to be going back to the September of 22 lows. That would be a very interesting level. Very oversold if we get into that zone. Similarly here on the 200-day average, I don't think we're going to get back to September of 22. That would be a long way down here for the 200-day average. You can see where we are now and where that September low is, but absolutely could get down to 36.23, which is a pretty decent move down from current levels. If this breaks, however, we could be looking at a much more substantial low. So very critical level, 36.23. Be watching that one quite closely. Last two times we got into the zone, we rallied from there. But if it breaks down, you can see we just get some really, really aggressive capitulation style moves through that zone. So definitely something to watch here on the 200-day average. Moving over to the dollar, as you would expect, continues to rally, super aggressive. We're getting very close to that upper trend line that we've been respecting for a couple of months now. Definitely interesting. Hit that trend for the first time at the beginning of August, multiple times here throughout August. Now we're getting close one more time. If we get into this area and we start to get a little bit of a rejection, that could be interesting. Obviously, the trend is still very bullish and you have to respect that, but you could look for a shorter term pullback potentially from that level. Moving over to the volatility indices, move index, another bullish day. Not super bullish, but a little bit. Expanding the VIX here, you can see we are getting back up into that 19 area. Stopped right at the trend line, ended up holding there, but we did get above the 200-day average. Very bullish, bullish momentum, bullish RSI. Almost overbought on the daily chart. Definitely interesting. This is pretty aggressive at this point. You can see we've gotten into the zone multiple times. We ended up getting rejected from here. But if this starts to break a little bit higher into that 2250 area or up at the trend at 25, we could be looking at a more substantial move down. You can see this downtrend has been holding for a long time. And that upper trend line sitting in that 25 area, which is a little bit dangerous if we get all the way into that zone, could be a substantial move lower. Moving over to my accounts, you can see I did okay. Qs were down $5.40. I ended up only losing $4.40 per share. And I did have 200 shares, so I was able to mitigate more than half of the losses. And you can see we're up a little bit after hours, which is nice. I ended up selling a 355 call for tomorrow. Again, continuing to collect about $300 a day in credit on those calls. And if we are able to hold a little bit of that gain, that could be a nice little profit for me. Definitely interesting, up about 70 cents after hours. We talked about it on the charts. Of course, everything is still bearish, and I'm still playing lots of defense. But I do think there's starting to be a little bit of potential for an up move. Just like I talked about yesterday, everything is still bearish, but we're showing signs of extension. Let me know down in the comment section what you thought of Costco earnings, or the charts, or any of the charts that I should be watching. Obviously, everything looks weak, but is there anything that you're watching for some potential bullish moves? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.